Hey, welcome guys. This is the Market Sniper. How are you doing? Glad to be back with you, and just need to give you almost a kind of emergency update on something that's suddenly gained real momentum and is looking really sickly to the south side, and is going to affect a lot of our crypto calls, gold, other FX pairs, yen, a whole bunch of things right now, and that is what's recently just transpired on the dollar. So overall, what's been going down on the dollar is we got a shaky non-farm payroll with unders on unemployment, bigger unemployment number than we expected. Then, second of all, we got core CPI coming down quite substantially, shocking the market to the downside, beating even the reducing expectations. This is all pointing to real hard economic slowdown. And well, there we go. We got a little dollar dips headline that showed up just in time, ahead of Powell. So everything against the dollar is going to firm because the dollar's looking weak. And I want to just highlight on the macro. Our original upside HVF, that was the Dixie that we gave us, the Dixie call, which did perform to its upside HVF like that, and across there, and you may remember target runs up top there, and we've spoken of the watermelon smile around this 104, 103 level. I've drawn the 103 level kind of in pink. That was initially resistance, and then broken with momentum after a little step either side of the 103, and then a blast up to the upside. And since then we've been fishing through the low. We did that technical dip through the 100 right there, and broadly since the beginning of this year the dollar's been pretty strong. 1, 2, 3, 4. Now you've got to remember they led the interest rate hiking, and that's what gave them the currency strength. But the problem is the debt markets. The problem is the debt markets, and the debt markets started to go up. Now remember the geyser with the two taps when you have all that pressure, and that's the original currency deflator was the yen. The geyser with the two taps explanation is a visualization for you guys to see that there is huge debt-based pressure, and you essentially have two taps at the bottom here, 1 and 2. You either let your debt devalue, which is what America did. Their longest term debts actually from peak to trough, from the 2020 high down to where we are, lost 45%. The 30-year lost 45% of its capital value. So you have a D here, and you have a currency there. So you either do the debt, D, or you do the FX for releasing the building pressure of deficits, because everyone is deficit spending more than they can, and this hot water tank is building in pressure and is going to blow. So you release it out. Now the Japanese, as we've explained before, did the bulk of the pressure release on the currency and have tried to maintain their debt at its existing level. The Americans allowed the debt to devalue and actually look to maintain its currency, and in an environment where others were letting it go, their currency actually ticked up. So you see the two different strategies. Problem is, friends, is that the debt market started to climb again. The debt market started to climb again, and that needed stopping. It's causing real consternation. So if you have a look at the yields, they turned down. But if you have a look at the value, well, let's just have a look at that. We spoke about that not so long ago when it was running up over here. Let's put the eyes on and just show you the technical analysis. To us, we've told you this looks like a future upside rates spike in the building that nobody's going to want. That's right, everyone talking pivot, and we keep talking about rate spikes. So what happened when this started to go up? Well, the Americans had to change tune. If they continued to assert currency dominance and be bullish and hawkish on rates to keep their currency strong, what would eventually happen is the debt would have continued to go up. In other words, the yield on the debt, that's to be clear. So that's debt valuations going down, the yield going up, which will lead to an interest rate spike, which they'd rather postpone, even if they can't help it from not happening at some point in the future. Subsequently, by letting the dollar go and that's on data of the core inflation going down and everything else, oh, look, it's softening, we're winning the war, all of this sort of stuff, with the help of the bankers selling the dollar and pushing some of their money into other currencies. We'll go into those other currencies into a bit. What you actually are getting here is you're getting a pullback now on the rates, but don't get too excited. We don't see you running this level. Somewhere around here you will turn on the rates, but that still could be a number of months of dollar weakness during that period. Somewhere around here would be my best guess for a rate turn. I put a box for you. In other words, a turning up again of interest rates. In other words, you think you've won against inflation many times, only you haven't. It's like Count Dracula. You haven't driven a wooden stake through its heart. It comes back. It's like that Z-grade horror movie. It just keeps on coming back. So you could go up a little bit on rates, up a bit, and then you could get more dollar weakness, down on rates, and then you could get up a bit before you eventually say, okay, we made a low in the box there. So this is typically what's the balancing that's having to go on. This is not a hard sell period. Yes, this last period right here has come down pretty hard, but overall you've got to remember it was actually going up pretty fast as well within that. So you're getting a kind of channel that is actually not particularly steep on the downside. That fairly sizable down leg move there, but then you got a run up, fairly downside move there, but then you got pushback. So what you're getting is marginally lower lows, marginally higher highs in a trend, which typically eventually bottoms out at some point. So this is the driver. So what's that mean for the dollar? The dollar's got to soften to stop the bond market from weakening too much. They need rates lower for the bond market to be stronger. Rates lower for the bond market to be stronger will require rates lower will bring the dollar down. So this is what we're starting to see. Let's have a look at some of the setups, and this is why we've said it's a yen weakness trade on this channel, GBP USD for example, because dollars turned weak and has actually lost the ground against the yen. So here's cable, as it's known affectionately, the old lady. This is an upside HVF that is triggered, and we've been monitoring that in the community for a while. Don't forget, click the link below. No trading metamorphosis programs are available. However, you can join on the self-study. You will get all the recorded materials that we do. You will be able to get a Sunday session with the community. Every Sunday you will get the live trading day with me every month, and occasionally updates that we make broadly available even to the self-study guys when we think they're super important. Good. Beautifully recorded, all ready to watch, learn all that you need, and you get that upgrade option later if we make self-studies available. Now, just as everybody starts talking about the dollar weakness, you're likely to get a little bit of a rally. Why? Because we've just made the first interim on the GBP USD. Things never go up in exactly straight lines, and you've had a pretty close to straight line there on the GBP USD. You've made your first interim. Quite possible to get a pullback to that funnel. But in the longer term, over time, you could have a series of events stalling and winding up a little bit at our second at around 133. Boom! We're actually calling a 139 to be run, which could see falls on the GBP USD. That is weak dollar. Just as Bitcoin was looking gutless, and by the way, we said there's a potential loss in value of Bitcoin. That's postponed now by the dollar weakness. So just as Bitcoin was looking super shaky, and we'll show those technical patterns on Crypto Sniper. Watch out for a crypto video. But for anyone who's crypto interested here, this sudden weakness, the bigger markets are far more relevant. The currency markets are the ultimate. If dollar starts spilling its guts, it's put a bid under Bitcoin, and that's already begun. But the alts are still outperforming the Bitcoin dominance position that we have still holds. So you've got a GBP, one of the big currency old lady pairs, pointing to a 1.4. We have a similar structure on the euro, all of which are sustained. Where are we now? We're at 129. We're talking 139. Now, in currency parlance, a potential run of the 140, which you wouldn't stop normally exactly on the purple line, is pretty vast, going from where you were around about 126 not so long ago over here. So where our stop loss is on our setup, you see the 126, the downside and that was the beginning of July, to finish at some point before the year is out with a 1.4 from 126 is a significant for a big currency pair move like cable. So it's quite a brave call. Look, some things can take a bit longer. Sometimes they can happen real quick, and then they can get done, and then there can be some serious pushback. After this, you can expect some degree of pushback if the currency starts to get spoken about too much in terms of its weakness. So let's have a look at the euro just to highlight this, because this is going to have positive effect on gold, Bitcoin, yes, all these things. So gold, friends, you are watching dollar having its turn, doing devaluation, and you can see a similar move out on the euro. So let's just draw that for you. Pop, up, pop, up, pop, up. There she goes. Wait for the draw tool to kick in, and there it is. So with the euro, we've got ourselves, remember that the euro gets a special benefit typically. It's slightly low slung pattern, a slightly low slung. I prefer the cable pattern. If you're asking me which one would you take, I would go with the pound. But there's a possibility of a 116 here, and you're just breaking. Now, we prefer the early mover and the stronger mover generally. So again, the pound, but this one can limp home, might take a bit longer, but you could be looking at 116. We discussed entries in the community there and where we could put tactical stops. You're still talking about a 6 plus 5.5 to 6 risk reward ratio with minor refinements, and you're looking at 116 on the euro potentially, currently trading 109. But this is quite abrupt. Sometimes you play footsie with the line. We call that the break and feign back in. So both cables at the first interim, which is the equivalent of here, and you're just breaking. So the minute everybody goes, okay, so that's the trade, it's the dollar, that's usually when you'll get a little bit of a pullback. So don't within 1 hour or 4 hours or 1 day or 2 days of this video say, you see, it's actually lower. You can get that. Think about this. Look at the time frames. These are daily setups, and I've even squeezed the chart that you are barely seeing it where there's any separation between the candles. So if I put it like that, you can see it's a daily chart. This is going to dominate quite possibly till the end of the year, until these targets are made. So this is, again, long term, not as long as the Bitcoin dominance core, which is taking Bitcoin to sub 20%. That means a lot of alt markets are surely going to move. But it's a long-term call for certainly the next 6 months. You're going to bias against the dollar. In terms of its value. It's something fun to have a look at. Maybe you could also have a look at Swiss franc, which is often pretty strong. Now remember, the Swiss waded in and did a early cut to not appreciate against the euro. I'm going to do that one upside down. So actually, that confuses too many people. Swiss franc USD. Let's do it the wrong way around. It's okay. It's not particularly special. I would imagine the Swiss franc would drift up in this scenario, but it's not looking especially magnificent. I would go actually weirdly with the pound ahead of the Swiss franc at this stage. You might say, what about the euro pound? Well, I'm going to go GBP euro, and I'm going to show you that the pound is my champion here. The British currency. Oh, don't forget, they've got a new World Economic Forum leader. So if we put and go the weekly here, it's starting to rain. If you go weekly and even monthly here, you can see that the pound has been relatively low against the euro. It's been in a range, a very interesting range here. And this is looking like a rounded bottom. And this is very low vol and working its way up. So given the relative strengths of the euro and the pound against the dollar, I prefer broadly the pound. And the pound hasn't been a star generally as a currency over the last 4 or 5 years. But you can see how it's broken down. This was obviously during the subprime, being very financial backed. The City of London, etc., etc. This was a big broadening structure. Again, it broke down out of that. Boom bosh, out again, testing the lows, but it didn't make a new low, and this has become a little bit of a rounded bottom, and now it's the time for the pound to shine. So GBP is going to be a strong currency to hold. What does this mean actually? Well, let's go to gold and make a clarification on gold as well. So gold now, we'd warned there was a small possibility or a possibility of a head and shoulder. We'd had a bit of a slowing up. We had the 2. That's been blown away. So let's just be clear. That prediction I won't say it was, we guarantee that it was happening. It was just a warning, don't be wailing in. But that's not going to happen. We were wrong on that. There's your falling wedge. We had another falling wedge like that at one point, and that broke out, and since then you've just been strong. Gold to new highs on weak dollar. So when everyone talks about the USD JPY, you know, the dollar's so dominant, no, it's yen weakness. Look at the gold yen chart if you want strong versus weak. You've had a reasonably 4 of the 5 months, 5 of the 6 months we've had the Dixie broadly up against the euro, which is a little bit of pound. They're going to spend the second half of this year being weaker. Why? Because their current economy was so strong, wasn't affected by the super high interest rates until suddenly it was. Until suddenly they had to start letting the facts start bleeding out in the numbers, and then the numbers started to look quite awful. And the fact that Euroland actually cut, Swiss franc cut, and the pound, the British backed off from too much more in terms of rates increases, but American was hawkish. Now they're being forced to consider dovishness, and in actual fact this 2,300 has pivoted, and we suggested it's going to be one or the other. It's going to be a neckline, or it's going to be a base of support. And the good news is for gold is it's a base of support. There was that possible shoulder. At that point it was looking somewhat precarious, and that's what we warned about. That whole shadow that was looming behind our back, gone completely without getting the knife between the shoulder blades. I'm happy to announce I'm a gold investor. I rarely call potential short trades. I did put a hedge myself and lost $500 on it. I had a stop up there, so it was a losing trade. I got it wrong, and I thought I'll hedge in case of that. It's still there, and the YouTube is still there, and we are wrong, and we're happy to say we're wrong on it. We just like to be always pragmatic, not always only bull. We got to talk about those moments where it could be weak. This was a beautiful long call. We were very leveraged long there, and that was an amazing period of trade for us from there to there. Okay, so softs could also run. Other commodities could get bid support. That head and shoulder didn't happen. You're about to, in my opinion, run this high, and this has turned into one complex continuation pattern. Normally when you get a marginally higher high, this is the broadening structure we would have warned you about. It's an ascending broadening structure, and it's in play here. I wouldn't say you still can't worry about it at all. This thing goes, it continues to go. But if you go to the next high, for short-term traders, that's a great move. Even if you are to pull back to the splitter and return for a while at some point in the future. It points to a new high at least. Whether it'll be a sustained new high and just keep running. We had a similar thing here, by the way. So sometimes the technicals just make no sense. You had a similar thing here where there was potential risk for a head and shoulder. It never came, and we never called it, but you had a marginally higher high, and then you sold off quite low. You didn't come all the way down, and you just shrugged your whole little shoulder, your whole little period of weakness off, and you blasted higher. Done. And that's probably what's going to happen on gold here as well. So pound is a long on the FXs, but remember, gold is your ultimate king. If you need a reminder of pound, which is going to be our pick for the strong currency for the second half of the year, take a look at gold GBP and decide if you really want to save in anything else apart from gold ounces. This is gold GBP. So beginning of the year we were in and around 1610. You are 1873, and gold is building to the upside. Gold is building to the upside, and I would expect it to make new highs as well in due course. Gold is building to the upside. Slight grind line there, so there could be a stab down at some point. So it's not in a turbocharged, unbelievable that I would go super leveraged long on it, but I would expect it to trade up. There's a little bit of a grind line. Sometimes you can stab down, or we squeeze and pop out the top quite momentously. So the rain is coming. I hope it's not affecting with too much with the audio. So gold is strong. So then we have to also go past Bitcoin. Now on the, I normally save that for the Crypto Sniper channel, so I'll do it very quickly. But the big thing that's come with Bitcoin is that you've tapped out near this low, and just in the nick of time, really, because Bitcoin has been sustained weak from these 69, 70 levels. Sustained weak into this. The weakness now in the dollar has given Bitcoin a gist of life. Oh, and the Trump event. Trump more likely to become president. He's the crypto president, we are told. Well, I don't know. I'm not that impressed with what he said on crypto, but now he's, maybe a little bit more open to it. But he was King Dollar Man as well last election. But nonetheless, in the absence of new drivers, we have a dollar weakness period, which has now lifted crypto back into the continuation descending megaphone, which could be one macro continuation pattern. However, we have warned of, and it feels like we're having our bread both ways on Bitcoin, and it's been a difficult one to call, but we have warned that you did also, and I'm going to flip this to the inverted chart and put it on. Of course, silver will be looking great as well, by the way. Just let's finish on the Bitcoin. We have warned on Bitcoin on our Crypto Sniper channel that on the inverted side you were very much looking like you'd had a W bottom. Let's get that grey line off. And that you triggered a reversal. Bit of a base plated there. You did trigger that 60,000 on the downside. It started to run out of steam, get the shooting star. We were expecting a pullback to at least the neckline. Now you've had a pullback well beyond. That pattern is invalidated the minute you run 64k. So the whole pattern, because we called a left shoulder, we want it early to be proven wrong, so that we're not hanging on to any idea of shorts on Bitcoin. We want it early to be proven wrong, and it would be proven wrong right there, 64,000, not far away. So the pullback reversal on the inverted chart gets discounted once it clears that low over there. Of course, it's a high point at 64k. Okay, awesome. So that's Bitcoin, that's pound, it's gold. We didn't do silver. I'm going to go back and talk about silver. So many people love silver, and it's the right thing to do, in my opinion. We're investors in silver, and we can see new highs on account of the dollar weakness. See how that candle's changed. A nice bounce. This is a bit of a W bottom. Let's drop it down to a slower and lower time frame. So there's a bit of a neckline for a W bottom in silver here. Proper Miami rain. The moment you come to record outside, it's been sweaty hot all day, sun guaranteed. Murphy's Law. Hopefully you guys can enjoy that and see it chucking down. It was a little bit of a broadened structure and was looking a little bit haywire, but I would argue there's a slight descend to that, and that you're likely to make a new high. What's the gold silver ratio doing? Let's make sure the gold bugs and the silver bugs in this dollar weakness trade, go away bug, are properly served. Let's deal with that. XAU, XAG. For now, the gold is on the upside after spilling. Let's just remind everybody of the gold silver ratio and its spill. We seem to have lost a lot of our lines. Let's actually go back to GC1 interrogation mark, get them divided by each other. That gold, look at that gold ripping, guys. That is a thing of great beauty. So there's your gold silver ratio. And there you can see we are escalating a little bit, but just running out of puff. So silver's starting to get his shoot on. It could indeed be that you run and take out these lows to the downside. So looking overall, I would say pretty positive. Gold starting, but silver to follow. So that's where we're standing, guys. Okay, thanks so much for checking in. Don't forget to give us a like and a share. We appreciate having you here. The rain came People came, everything came, so it got interesting, but we'll catch up with you next time. God bless, watch out, dollar weakness on the cards. Bye.